Hello everyone, Maurice and welcome to Tanks Invest, where we talk about investing, finance, and professional development. For today's video, is editorial purposes only. The stock we're going to talk about today would be Gamestop, ticker GME. So as you saw my video on AMC earlier today with respect to the whole Wall Street prompt affectation that we've been experiencing with respect to these two stocks so far. So I want to also go through the GME GameStop stock as well, knowing the fact that we're currently up about 15.22% as of today at 11 a.m. on the East Coast in the US right now. So I'm going to go through a technical analysis to see what I think about this going forward, right? Are we going to see more pump going forward? Are we going to see more of a sell-off going forward? What the right resistance level for us to buy at if you're thinking about buying it or even gambling your money? And what are the levels that we should be watching out for to further dollar cost average if you want to continue to build your position upon this? And also going to give you my price target for year end 2021 as well. So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for GME GameStop, you can see that ever since last year in December, we were trading around like the flat $17, $15 level, right? And ever since the whole Wall Street bed pump, we subsequently went up all the way from the $17 level to the almost close to about $500 level, the $483 level, and immediately sold off from there. And again, right, with respect to the psychological dynamics and the supply and demand perspective, whatever goes up really, really fast comes down really, really fast. And that's exactly what happened, right? This is mainly driven by, you can see why the MACD has formed. This is purely based on human emotions. This has nothing to do with business fundamental at all. This was basically just a cult-like following type of pump in a momentum that picked up a lot of media affectations, picked up a lot of human emotions. People were FOMOing, and subsequent to that, we create this huge surge of the price level because of the imbalance in the supply and demand dynamics in the market, which drove the price to go upward from there. But however, on top of that, because of the fact that a lot of hedge funds had put a short order, a bet on basically GameStop to go down from there, knowing the fact that GameStop is not a company that's technically a growth stock, right? It is a video game retailer, brick and mortar to be more specific. Obviously, they also have an online commerce site to sell video games, but the bread and butter majorly is in the brick and mortar. Having stores at the mall, right? Selling video games consoles, and even like Pokemon or trading cards and stuff like that. So it's a relatively more of a novelty type of company, stores with a lot of real estate footfronts and obviously a lot of lease agreements that they incur on a monthly basis. So they're burning cash significantly with respect to the on their daily operations and with respect to the business fundamental as a whole. But with respect to the top line, right, what they sell is really video games. What they really sell is other novelty type of play, with respect to Pokemon cards and consoles, which, as you know, you could probably buy that anywhere else, right? There's a lot of substitutable type of commerce sites or companies, retailer, that also offers us comparable products and services, right? Which subsequently gave a pretty negative outlook onto the business fundamental and also the macroeconomic outlook for the stock, right? And also on top of that, GameStop got punched in the face because of the fact of the whole COVID situation that we got from last year, right? With respect to, just malls being shut down, people don't go into malls anymore. To, just people, are more reluctant to go out to buy video games or exchange video games, which is also part of their business. Subsequently hindered their top line significantly as well, right? So it's just been kind of bleeding cash, paying the rent on a monthly basis across the US, which they have multiple stores, like they have multiple hundred stores. And just think about that. If they pay, monthly leases for like 500 stores, they just basically throwing out cash out the door every single month, right, without generating anything in return, which subsequently gave a very negative outlook and also a huge cash burn going forward, right? So this pump was definitely not a logical one in a business fundamental perspective, but it makes sense in a more of a supply and dynamic perspective. It also makes sense in a psychological perspective, right? This pump that you see in front of you is basically driven by a short squeeze. What short squeeze is basically is that investors like hedge funds like Melvin Capital place a bet on that that GME is going to go down from here. However, people kept pumping it up because of Wall Street bet. Right? The codes like soldiers, the codes like following, basically try to bet against the hedge funds by pumping the stock upward, right? And as the stock goes up, right, knowing the fact that the Melvin Capital and multiple other hedge funds has already placed a short order onto the stock, it subsequently required Melvin Capital or these hedge funds or these corporate investors to force them to buy the shares, which subsequently pumped the stock even higher because of the supply and demand dynamic imbalance, right? So subsequently drove up from there. But whatever goes up all the way over there, immediately they need to find some sort of liquidation events to stop their bleeding, right? Because they cannot just keep buying up and away and just like have infinite amount of cash, right? We're not playing Monopoly. We're not playing Grand Theft Auto with infinite money in a cheat code, right? So they subsequently have to sell on a loss, just for the sake of selling on a loss, and that's how you drove this huge volume. And when you see one major corporate investor sold, right, then immediately everybody start to sell, right? You can see that the selling pressure was extremely steep because of the fact that we formed a huge gap here historically on January 26th, another gap that will form in the subsequent days, just 2 days later on January 28th. And whenever we got there and then we hit that huge all-time high of the 483, which we never really substantially tested, it was just more like a one-time peak, and I feel sorry for whoever got in around these levels, that they subsequently was forced to sell off. And when one big corporate sellers sell off, everybody starts selling off, and which subsequently create this ladder down, and then a big gap, and we hit all the way back to the bottom where we came from, right around like the $50 level, which is the pump before the pump that we got based on the flat water level that when we were kind of dead in the water back in the day, around like January or like December time period, right? And ever since then, we kind of pumped up again because of another Wall Street bet dynamics, another cult like following that happened. I think this happened because the Wall Street bet account was shut down, but I think the volume and the cult like following is slowly getting picked up again, which subsequently drove that up again with more media affectations. And subsequent to that, we've been kind of hovering on a sideways perspective right now for quite a couple weeks now, starting from looking at the March 24th all the way currently to May 25th. So it's about like 2 months to be exact of just sideways consolidation because nothing really has been happening, right? It's just been kind of trading sideways. And I think the reason we're holding at these levels is because a lot of people bought in, and I think they're holding their breath right now. A lot of people are holding their breath right now to hope that we will eventually come back to recovery, come back to the economy for good, right? As we're slowly getting more vaccinations, slowly getting more, outdoor dining activities and more people going out again. And malls start reopening up again, that they're betting on more of a recovery pump and then sell by then, right? Because like they've sold down so much already, and I think a lot of people bought around these levels, so they're holding the bag right now, but they're reluctant to sell or sell on a loss, if you may, right? So right now, as of today, you can see that we're up about 17.5%. I think it's still up in a way, and the reason we're kind of flying up right now is because you could see that we break through that resistance level at the $200 level, and that was a very strong psychological resistance level because any flat numbers again, right? $200, $100, $300 are always very strong level. And however, with respect to the supply and demand dynamics, that's kind of in balance at the moment. You could see that with respect to the Wall Street pump that we're currently seeing again, and the recovery play that we've seen across all the growth stocks. As of today, right, you see a lot of greens, with respect to a lot of these growth stocks, is also subsequently have a correlation effect to the pump in terms of the volume that we're seeing right now. So you could see that we're currently pumping up. And the next level of resistance level we're going to be seeing at would be, we actually broke that resistance level, was the 233 level, which we subsequently passed that. The next level resistance level, we also broke that at 241. The next level resistance level will be the 250, which is a psychological resistance level, which we are currently closing in on testing that. And if we break the 250, right, it's gonna go all the way up here to the 270 level at the lowest, or to the $285 to $83 level on the highest, right? And I think by then we'll be up about maybe like close to 25 to 30% from there. I think the likelihood of us getting there would be more like 30-70 in terms of probability ratio at the moment, because that would require a lot of volume. However, the hype was already gone past us. I don't see another like cold slide falling type of momentum play, because we kind of like manipulated this so much already. And on top of that, with respect to the short squeeze that we're going to be seeing, I don't think hedge funds are that stupid again, right, to be in that level, to over leverage themselves to the point that they have to buy in all these levels here, right? So I think the volume's going to relatively low. I think we should be testing around like the 250, or the highest around like the 260, and then we're going to reverse back down. So by then we should be up about like 25% and then reverse down backward, right? And I think the V shape's going to be relatively sharp in a drop, and I think the next level of resistance will be going back down to like the flat $200 level, which is the level that we have tested before the pump for quite some time, right? And I think that's a very logical thing to do. And then I think going forward, if we break that level, the next level of resistance will be somewhere around here. The first level will be the $165, $170 level, which would be the medium resistance level that we've tested several times, where you can see that throughout these small little candles here, which will consolidate sideways, these been just basically the levels that we've been testing at, right? Just to give you guys a clearer look, $175 level, you can see that it's hit the line like multiple times, right? And this is basically the psychological resistance level that we've formed for quite some time now. And this is basically cultivated based on the red pump that we have had here on February 25th. And ever since then, we've tested this once, twice, 3 times, 4 times, 5 times, 6, 7, 8, 9, 10 times before we pump up, right? So this is a very strong base that will form before the launch, right? However, this rocket ship is very non-substantive, knowing the fact that for you to basically shoot the rocket up, you need to have some ground or strong business fundamental, which is what I'm trying to say for GameStop, right? And as I mentioned to you, this company has really poor macro fundamentals, really bad business fundamentals. I think they are bleeding up to the eyeballs with respect to their cash burn that they have on a monthly basis. They are obviously unprofitable at the moment. And with respect to the growth trajectory going forward, I don't see a major recovery for them going forward, even though malls are slowly going back up in comparisons to AMC. I think AMC is more like a leisure and travel type of play that people have been, trapped at home. They've been dying to go out, dying to travel, dying to experience something that they've missed out on for the 1.5 years so far. But GameStop is just a video game, stay-at-home type of play, right? And people can purchase these goods or these merchandise, like these video games, these consoles, like at Target, right? At other places, right? That any brick and mortar retailers will sell comparable goods that GameStop provides, right? So overall, the macroeconomical dynamics, the business fundamental, I give this a very bearish outlook going forward. So for it to like reach these levels, like 245, 246, with the market cap of like 17.4 billion, it's just not logical at all. And if you buy it now and you think this is a good play, you are highly overpaying right now. You are highly overpaying right now with respect to the just the outlooks of this. And you want to be investing for businesses with good strong growth tailwind going forward, not with strong headwind going forward, right? And this company has major headwind going forward and is bleeding up its eyeballs. Financially is terrible. This is just an emotional play, and if you get in right now, you will get emotionally wrecked in the most bipolar way. You will lose all your money from here if you buy it around these levels, because like you basically betting on how people are feeling about the stock rather than betting on how the business is going to take you from here, right? Buying a stock is equivalent to investing into a company, right? Just think about that. Would you invest your money into GameStop right now with the growth potential it has? I wouldn't, right? And that's why I would stay away from this. But if you play based on the psychological dynamics, right now I would not touch this right now because we are testing the resistance level soon around like the 250. If we break that, I might buy a little bit just to play that pump. We might get there to like the 280, but it's not worth it in terms of like the risk reward ratio, right? So I think with the near term, we'll go back around here, go to like the 250, and then test that. If we go there, we go pump up all the way to 280, and then we'll immediately sell off. We'll see a major red candle that would come down all the way back to the $200 level, and then if there's like even less volume because of this pump and dump scheme, we'll probably see us going back down to the $160, $170 level from there. And long term wise, I think this is gonna slowly correct back down all the way. Eventually, people are gonna give up and maybe shift their dollars to the growth stocks, the companies that are truly growth stocks, rather than companies that is trying to be growth stocks and being pumped psychologically and people think is a growth stocks, which just doesn't quite make sense logically and analytically as well, and also psychologically don't make sense. That's why this chart is so out of whack. And you can look at the MACD's out of whack, right? Like how do you even this is not normal cadence, right? With respect to this huge volume and then huge sell value, huge buy volume, huge sell volume, right? In the near term, this is based on the MACD right now, we are still going up a little bit, and so I do see some sort of like a bullish signal in near term, which makes sense. We go to like 250 and then reverse, but RSI right now is highly overbought. We are above the line right now, so I do foresee us to be coming back down soon. So again, right, I wouldn't buy now. I would start buying maybe around like the $200 because that's like a pretty good moving average, good psychological resistance, and also I'll probably do like 10% of cash balance and then going down even more around like the 170, $169 level, maybe another 10% of my cash. Just know that this is a really risky investment opportunity. I wouldn't even call this an opportunity of investments. I think this is just like a day trading thing. That if you're good at reading psychology and you're good at reading the dynamics of the shift of the market, you could make some good returns from here, knowing the fact that this is basically like buying options, but with even higher unpredictability and higher volatility at the same time, right? But whatever high has higher risk means you could have higher rewards at the same time, but also equivalently higher loss at the same time. So just to go through the technical analysis again, with respect to GameStop ticker GME, again, right, with respect to the current valuation that we're currently seeing right now, with respect to the pump that we're currently up about 15% as of the day, we're just kind of flying upward right now. With respect to the first resistance level will be the $250 level, but the resistance level is relatively weak. So I think we're going to be testing around there, with a possibility of maybe 25% of even going further up because of just, euphoric pump or FOMO in the market. But the likelihood of that would be relatively low. But if you were thinking about buying it, as an investment opportunity, the first resistance level would be the 199 or the $200 level, knowing the fact that that's like a psychological resistance level, a mental resistance level that would form. And if we go down even more, the first level will be the 170, which is a more of a true resistance level that we have kind of formed for the last 2.5 months so far. So that's a good price point if you're thinking about like dollar cost averaging. If you're like bought at the 350, like super high level to dollar cost average, but you want to still have hope, or you're still hopeful that we will turn around or we will have another pump, a psychological pump driven by the Wall Street gangs, right? But I think the likelihood of that will be pretty much of a stretch because like you're basically betting on someone's gonna post a Twitter post or something on Reddit to pump it up without any substantial business fundamental ground to back that up, right? So that's basically gambling, right? So I don't advise buying at these levels. But if you want to know about the resistance level, the 170 would be another one. And we go down all the way to 135. I don't even know why I would call this a steal because it's so overvalued at these levels. But that's like the third psychological resistance that we have formed, right? That we have built a substantial ground historically, right? So if we get there on top of all of these resistance level, I think that's fair for you to buy in with the hope that you could subsequently come back up with another pump and scheme from the Wall Street back gangs. But Again, right, gambling straight up, right? And you could see that with respect to my price target for year end 2021 or the next 12 months from here. I give this a very bearish outlook with respect to the profitability margins that the company is generating, with respect to the cash burn that it's generating, and also with respect to just the macroeconomical outlook for the brick and mortar video game or trading card type of novelty type of business. Um, it gives us a relatively bearish outlook, and I think this company is basically dying. It's on a decline. It's on a mature industry. That the outlook for this, in the next 2 years, for us to go back down to the $15 wouldn't be surprising to me. Basically, going back to it, and even potentially file Chapter 13 or Chapter 11, going through bankruptcy because of the bleeding that they have on all fronts, right? And if you buy it now, I think you would totally lose your money long term. But in the short term, if you think about this as a trader and you know exactly what you're doing, reading the psychology, reading the supply and demand dynamics well, then you should make some return from there. But again, non-substantive type of return, you're basically gambling. So I'm not a gambler. I am an investor, and I would personally not invest in this stock. So that's it for today with respect to my technical analysis on GameStop ticker GME. Again, this is a relatively volatile play, more just a psychological, manipulative type of play as well, with lack of business substantive fundamental for you to back up your thesis if you think about investing. But if you think about like as a day trader, I think this is a interesting quick book if you know exactly what you're doing, reading the psychology behind the trades, reading the volume and the demand and the supply dynamics of to make your formulations on the executions of the trade. That could be fine. But again, this is gambling based on human emotions. And when you invest, you should think about things logically, analytically, with, not just based on how you feel about the stock, right? So hopefully you guys find this helpful and also give you a more of a clearer picture around the methodology, and about how I approach these type of investments. Please hit the like button, the subscribe button, also the bell notification to watch up on the next video. Really appreciate it. Take care. Bye.